Hey yo, what's up? It's your boy Wanel and I'm back again with another video. So today's episode, I am going to show you the scalping skill that I've been testing for the last week. And it seems to be very accurate according to the results. As you can see, these are the results. But there is only 4 things that you will need to know with this skill. The first one, you need to know how to spot the trade. The second one, how to enter that movement. The third one is which time frame are you supposed to be using to trade this movement. And the fourth one is how long you're supposed to be on that trade. So those are the 4 things that I'm going to share on this video. But before we can jump into that episode, I just want to mention this. We are still running the $100 deposit. If you want to be a winner of that $100 deposit, there is only 3 things that you need to do. The first one, you need to like this video. The second one, you comment. And the fourth one, you need to subscribe. If you are already a subscriber, you don't have to worry about a lot of things. You just need to like and comment. And the winner is the person who's going to get more likes on their comments. So if you want to get more likes on your comments, which means you need to tell your friends to come to my channel and like your comment. They don't have to subscribe if they don't like my content. They just have to support you by liking your comment. But I'll only announce the winner once we've reached 500 subscribers. We are currently sitting on 280 subscribers, so we are almost there. So without any further ado, let's get it. I'll try to be as quick as possible with this video. I don't want it to be long. Okay, I'll first show you a demonstration of these things, and then after that we can look at the real chart. So if you get something like this, a market that is going up and it comes down to this level, it goes up to this level, it comes back to this level like this. Maybe these are your trend lines. You get your trend line here, you get your trend line here. It's not that accurate, but it's something like this, right? So if you're getting something like this, and then so you already know that every time when it hits these trend lines, it changes the direction, right? So every time when it hits this trend line, it changes the direction. Maybe let's say this is a 1 hour. This is a 1 hour time frame, right? So this is a 1 hour time frame, and then once it comes to this level here, down here, on this purple box, once it comes to this level, so you already know probably it might bounce on this level and then go up, right? So what you're gonna do is you'll have to drop down to a lower time frame for you to be able to like catch the move quick in a hurry. Because if you are waiting on the 1 hour, you might have to wait for the 1 hour impulsive move, and then you wait for a correction. Then maybe that might take up to like 5 hours of waiting, right? So it's still the same. You go to a lower time frame, you look for impulsive move, you check for your correction, and then you take another impulsive move. The strategy is still the same. The only difference is you're using a lower time frame, and also your risk management is much higher. So the lot size that you will be using, it's not so hence why it's more advisable. Okay, per se, what I will do is I will create another account that will be basically for scalping account, and then I'll put money there. Obviously on that account I won't be using a stop loss because that account is basically for scalping. And then I'll have another account which is a long-term account. This is the account that I'll be using for investment to grow it. Yeah? Okay, back to the market. If it comes to this level and then you jump to a lower time frame, this is a 1 hour time frame, remember? So you jump to a lower time frame once it comes closer to this purple box. You drop down to a 1 hour, because the reason you're dropping down to a 1 hour, it is because, okay, it's loading, just give it a minute. The reason why you're going to a lower time frame, okay, the reason why you're going to a lower time frame, it's because, you see, this is how the market works, né? You will first, before you get a 1 hour impulsive move and a correction, you will have to first get a 1 hour impulsive move, and then you get the correction, and then after this you get the 5 minutes correction impulsive move, and then you get the correction, then you get the 15 minute correction impulsive move, and then you get the 15-minute correction. So that's how it goes, step by step. It won't just jump from 1 minute to 4 hour correction or impulsive move. It goes step by step. So hence why you need to drop down to a 1 minute time frame when you see this on 1 hour. Okay, my chart is being funny right now. Okay, but I'll continue with it like this. And then once you drop down to a 1 minute time frame, what you'll look for is, you'll come to this purple box. You look for impulsive move like this, and then you wait for a correction, and then you take another impulsive move like this, né? But obviously when you're taking a trade on 1 minute, which means your lot size has to be bigger, hence why you need to have a specific account for scalping, specifically for scalping. So you find this on 1 minute, but only to find out that on 5 minutes this is only just one candle. Maybe this is only just one candle on 5 minutes, or maybe it's two candles like this. But on 1 minute it seems like an impulsive move and a correction and another impulsive move. But on 1 minute it's only one, sorry, on 5 minutes it's only two candles like this. Maybe on 15 minutes maybe might be 4 candles, so on and so on. Maybe on 1 hour it's only one long candle, right? So go back to this thing. On 1 minute you get the first impulsive move, and then what you do is, once it breaks your trend line, once you get the correction, obviously you get the correction. Once you get the correction, and then you'll put your first entry after the break of the trend line. So once it breaks the trend line, it will take you in. And how long you're supposed to be on the trade? You're supposed to stay on the trade up until the market reaches the 100% of the previous move. What do I mean by that? I mean, if you get this move, okay, let me put it nicely. You get this first move, and then you get your correction. When you're taking the second move, you have to take the second move and you stay on it up until it reaches the 100% of the previous move. So this move, it's 100% of this move. So once it comes to the 100% of this move, which is here, you take your profits, because what is coming next, if this is a 1 minute, a 5 minute correction will be coming in, which might be longer, and then you get another impulsive move. So now it becomes different, because you first got the 1 minute correction, and then you got the 5-minute correction. So now, which means you're gonna get another 5-minute impulsive move, which means the 100% of that move will be the total move of this. Okay, let me use a different line because this one looks more clouded. This move, copy it, copy this one, then you put it here. So that will be your take profit, because it's 100% of this previous move. I'm not sure if you understand me, but let me jump into the real charts so we can have a real example. Okay, if you are following me on Instagram, you would have seen this chart that I've posted. This chart, sorry guys, that I've posted this chart, which is a GBP New Zealand dollar. I've posted this chart, which if you were following me, you would have been able to get this one. But basically with this, you can see when it comes to these trend lines, it bounces back. Even when it comes here, it bounces back, right? But now remember, this is a 1 hour time frame. This is a 1 hour time frame. Then let me just click playback. Playback. Click back here. Yes, let's pretend like the market is currently here. Ne? The market is currently here. It's approaching this purple box. I keep on saying blocks. It's approaching this box, and then what you do is you quickly jump to a lower time frame. We're gonna start with an hour. I like starting with 1 minute, and then I move on to 5 minutes, 15 minutes, so forth. So jump into 1 minute time frame. So remember, when you go to 1 minute, the only thing that you'll wait for, you wait for first impulsive move, and then the correction, and then you take the second move. So you're going to okay, it looks small. Let me just zoom it in just a bit. Okay, I think it's better like this. You play like this. We have to see the first impulsive move. Remember, the first, this is not an impulsive move, it's more like a correction. Okay, and just an example, an impulsive move, it's a move like this. You see how strong this move is, and then you see we got the correction. After the correction, we got another move. So impulsive move is something like that. But now remember, we're at the bottom. We're looking for something that is going up, not going down, because we are predicting that we are going up on this box. So we leave it like this. It goes up, it goes up, it gives a correction. You see the spike? You see the spike? Sorry, not this one. Let me delete this one. See? Come down. Okay, I was supposed to delete these trend lines actually, because now it looks like we are cheating, because we already see now where it's gonna go. But anyways, that's not the point. The point is to show you on how to spot these things. They are very simple, and they are also very dangerous. So you just make sure that you create a new account, maybe you deposit 500 rand or 1,000 rand, and then you know that's the money that you are willing to risk on scalping. In a day you can make a lot of money, and in a day you can lose a lot of money if you are careless. So we're waiting for the first impulsive move, right? That's what we are waiting for. Ooh, you see some spikes here. See some spikes. When are we getting this move? You can actually trade these things, play around with them, because you can really see just quick money. You can see this is the impulsive, now it's a correction, another impulsive is coming here. Take the money, you go out, you wait for another one, go on. It looks like a correction that's going down. It looks like it might shoot up. You can't just take every trade that we see. We only have to take the trade which we predicted. So we are predicting the up move. You might as well have to focus on that thing. Woo! You see now? You see this move? This is the impulsive move, and a nice thing, it's on the trend line. So it's on the trend line, and it's also an impulsive move. And then we are currently getting a correction. This is a correction from what I'm seeing. Breaks the trend line, we're getting another move. Now what you do is you take this move, you copy it, you take this move, and then you take the same move, the 100% of it. This is here, and then this is where you'll take your profits. That's your first target. Then you play again, coming down. Remember that we already got okay, let me take away this box, because it's like it's distracting us. We already got the 1 minute correction. After a 1 minute correction, looks like now we're getting a 5 minute correction, because you see this is longer than this correction is longer than the 5 minute one, this correction. So which means now your 100%, it's not just, you can't take this move. You can't take, let me take away this. You can't take this move only and make it the 100% of this coming move here, because they are not the same. These are not the same. This correction is longer, which means when the correction is longer, which means the move will be longer too. When the correction is shorter, which means the upcoming move will be shorter. So you can't take this move and then you project it. You say this is you can do it, but you will be limiting yourself. So you might as well have to take the whole move now. Remember, because this is 1 minute. When you're combining these two, it becomes a 5 minute impulsive move, and then you get a correction. Once you get a correction, we have to get the 100% of this move, like this. Take this one, you put it here, so you know this is your take profit. You can even maybe just put it just a little bit down, just to make sure that you get it. Once it breaks, it goes up. You're scalping, take your profits, Then once you take your profits, maybe now a 15-minute time frame correction is coming up, which means it will be an even longer correction, then which means now your 100% will be the whole of this move. It even broke this line. If it becomes even so now this whole move, you have to project this whole move as 100%. So which means you have to say this up until here, that is your second impulsive move when this correction it's over. Okay, just play. Ooh, coming down like this. I also like using MACD to enter the trades, because this is how I use MACD. I'll just touch, I won't dwell on it. This is how I use MACD and the RSI. So every time when I see a correction, and then my MACD is supposed to be approaching the 0 line. You see it's approaching the 0 line. You see, and then I get the second move. Then now there was this correction, but look at my MACD, it approached the 0 line. After the 0 line, it went up with this whole move. So that's how I use MACD sometimes to enter the trade. Okay, it looks like we are on a higher time frame correction. Let me use 5 minutes now. So once we break the trend line, probably going up, we're taking that trade. We broke the trend line, we're going up. Remember, what's the target? The target is to come up until this area here. Is to come up until this area. Okay, let's go back to the lower time frame we're on. Continue. Okay, now remember that I said your target is the 100% of this move. You're taking this, you project it, you put it here, then let's see if it's going to come there. Hopefully it's going to hit. It didn't hit our take profits, but yeah, so hence why I said sometimes you don't need to put it just there exactly. You just need to put it just a little bit, so that you make sure that you are banking on these small movements. So it looks like this is where the market is at the moment. When the market opens on Monday, probably we're gonna get more correction and then push up. So the correction that we're gonna get, if this is a 1 hour, maybe we're gonna get a 1 hour correction now, because this is, let me just make a little summary. This is a 1 minute, 5 minutes, 15 minutes, 1 hour. So we're going to shoot up here. Once we shoot up here, and then let's look at this. And then this might be the 4 hour correction of this whole move that came here. So we might be going down, but that might take even longer. So that's why when we are swing trader, you must be patient, you must be willing to wait. Thank you guys for watching this video. Catch you on the next one.